Hi, I'm Ron Ianeri of Ion Options, and I'd like to welcome you to the advantages of options. Now, I've been trading options for a very long time and on a professional level. And for a long time, I've known how much options could help an individual investor. They're an incredibly powerful tool when used properly. But the key there is the when used properly part. You see, options are extremely powerful. And any powerful tool can be powerful constructively when used properly, but they can also be powerful destructively when not used properly. But with that said, the fact of the matter is that individual investors can learn how to use options properly and harness that power. And in this environment, where more and more individual investors are taking steps to start to manage their own money, to grab hold of their own financial future, options are essential. I didn't say they're important. I said they are essential for the success of an individual investor. Now, I know what you're thinking. All right, that sounds great, but you know what? Why should I spend time, effort, and energy learning these things when I don't know what I'm going to get out of them? And you know what? I agree totally. Me, I happen to be lazy by nature. I'm not going to spend a cent or a second or a one drop of sweat if I don't know that it's going to benefit me. So what I figured I'd do is start off with showing you why you want to learn these things, why you want to learn about options. And when you see what options can do for you, then you'll justify the hours spent studying, the money spent in learning and gathering the education properly, and the time that you're going to have to spend in the sweat. It all becomes worth it if you see the end goal. And that is what I'm going to try to do here. Show you what options can do for you. From there, once you see what the options can do and the advantages you can have using options to help you manage and expand the size of your portfolio, you'll understand why I'm saying that every investor should spend the time, effort, and energy to learn how to harness the power of options. Now, there's two types of options. There's a call option and a put option. A call option gives the buyer the right but not the obligation to purchase a specified security at a specific price by a certain time. That means we have the right to buy something in the future at a set price. A call buyer is going to benefit from an upward movement in whatever underlying security that he's buying the call on. And there's the put option. Opposite of the call option in a sense that a put option gives the buyer the right to sell. Not the obligation, but the right to sell a specified security at a specific price by a certain time. That means that as an individual investor, I can own the right to get short something, which I guess over the last year and a half might not have been a bad thing. But there's only two kind of options, a call and a put. And believe it or not, they're a heck of a lot more similar than these definitions would indicate. You would look and say, hey, the call option gives the right to buy, the put gives the right to sell. They're opposites. In actuality, they're just two lanes of the same highway. One heading south, one heading north. Everything else is the same. Mechanically, they work the same way. So you have to understand that we've got two types of options. So what exactly is an option? Well, an option is an exchange-traded product, and it's a derivative product. Now, there's two things. Number one, being that it's traded on the exchange means that there is a level of security that you have trading these options. Since the invention of options, not one single contract has ever defaulted. That's pretty secure. So the product itself is well regulated, well managed, stable, and here to stay. Now, the fact that we've used the term derivative product should get most of you kind of nervous. Derivatives, they're dangerous. The derivatives, I heard about them. Relax. The fact of the matter, the term derivative simply means that this product, the option, derives its value off the price of some other instrument, some other underlying product, like a stock or an index or a currency or a commodity. So the term derivative is not something you should be afraid of. One of my favorite examples is, hey, you like ice cream? I love ice cream. But did you know that ice cream is a derivative product? You know, I mean, come on, let's relax here. It just means that the price of ice cream is derived from what? The price of milk. Ice cream itself, the product, is derived from milk. Doesn't mean it's bad, doesn't mean it's good. The term derivative just simply tells you that this security derives its price from a base that is another security. That's all. That's all that means. So when you hear the term option and derivative, don't get spooked. That's all derivative means. Now, an option is also a contract between a buyer and a seller. Each contract, one single contract, is worth 100 shares. So if one contract is worth 100 shares, then 3 contracts would be worth what? 300 shares. 5 contracts, 500 shares. 10 contracts, 1,000 shares. So what we have here is an exchange tradable product that is a derivative, meaning it derives its price from another underlying product, and each one of these contracts is worth 100 shares. And it's a contract between a buyer and a seller. And the nice thing is there are options on every conceivable underlying product. Whether you're a stock trader or a currency trader, or you like trading futures or indexes or ETFs, commodities, bonds, whatever you like to trade, there are going to be options on that underlying security. So you don't have to sit there and say, oh, well, you know, I'm a currency trader, so why would I want to use stock options? I don't know why you'd want to use stock options, but if you're a currency trader, you probably want to use currency options. They work the same way, same mechanism. So that's basically all an option is. Now, why are we talking about options today? Well, number one, proper recognition. Finally, after 30 years, the SEC, the institutions on Wall Street, are finally giving options their proper recognition. Options were always considered to be a risky product. Well, heck, if you use them as a gambling instrument, you're going to get those results. But if you use options properly, they are the perfect form of hedge. They help investors remove risk from their portfolios. And today, everyone is starting to notice that that is how options were originally designed to be, as something that helped remove risk. Because they had leverage and because they were so powerful, they were starting to be used incorrectly. They were being used as a gambling instrument. They were never meant to be that way. They weren't designed to be that way. They were designed to help remove risk from a portfolio. And everyone is finally seeing that. Hey, today there's a lot better education information out there on options. Why? Well, where are you right now? You're on the internet. The internet has brought forth many different advantages to someone that wants to learn something. There's tons of information and education now available on the internet. I happen to teach my classes live over the internet. That means you don't have to travel to some other state. You don't have to get a flight and a hotel. You don't have to tell your family goodbye, I'm leaving for 3 weeks to learn options. You could take it right from your own home over the internet. And the other thing is that with more and more people, more and more fluent in options, there's better educators out there. And that can only benefit you. There's better platforms and tools out there. Back when I was starting to trade options, heck, we didn't have the platforms that individual investors have over the internet today. We had platforms that weren't even close to some